It was the worst liquidity crash in the history of crypto, but what happened to exchanges? Why were people not able to buy or sell? Was there a place where things were really working? Can this be stopped from happening again? What new facts do we have that will tell us if our XRP and other altcoins will go up or down in value over the next few months? All of that is mine. The White House just called us. I learned a lot of new things about the trade war. You need to hear it. Let's read through this whole list. Today is Sunday. This video is coming to you today. Please click like if this helps you in any way. A lot of people think that the recent crypto market crash on October 10th and 11th, 2025 was the worst liquidation event in the history of digital assets. It beat all previous records by a huge margin. When the market crashed in 2025, 20 billion in leveraged bets were wiped out, bringing open interest back to levels not seen since July 2015. The size of this is about 9 times bigger than what we saw during C19. The market value dropped by almost $1 trillion, and 1.6 million buyers lost all of their money. This is a much higher number than on FTX or Black Thursday in 2020. The first thing that caused the crash was President Donald Trump's sudden news of 100% tariffs on Chinese imports. This sent risk assets instantly plunging. The announcement came after U.S. stock markets were closed at a time when global liquidity was already very low. There was a lot of leverage in the market, and most of the liquidation positions were owned by retail traders who were net long. Why stores couldn't deal? I did a live stream on Friday when all of this was going on. Different platforms like Binance and Kraken were said to not be able to buy at low prices. A lot of people thought it was rigged. Let us learn a little more about what the heck happened here. Major centralized exchanges like Binance and OKEx have widespread technical problems that cause screens to freeze and orders to take longer than expected to be fulfilled. Many centralized order management systems were unable to carry out buy or sell orders during the height of the crash because of high-frequency trading bots and algorithmic liquidations. Centralized platforms relied on automated liquidation engines and auto-deleveraging to close positions automatically, leaving little room for human participation. This made things even more confusing for retail traders. Decentralized exchanges and DeFi systems, on the other hand, continued to work, showing how weak centralized exchanges are. The market crash was on a scale that had never been seen before, and there was more power than ever before. The news of tariffs and technical problems on centralized exchanges made the effects of the macroeconomic shock even worse. Retail traders who were heavily positioned on the long side took the brunt of the market volatility because they couldn't reliably access markets during the most volatile time because of exchange outages and illiquidation engines that were overloaded. Take some time to read this too. There is evidence that at least some parts of the October 2025 crypto liquidity crash may have been planned. Preyed on a flaw in the system that was present here. The timing and nature of the events that started just before Binance was to launch a new Oracle price system make people suspicious of trickery and targeted attacks, especially when you look at how some leverage products and margin structures were used. Researchers found that problems with margin, collateral, and unified trading accounts on big exchanges like Binance made it easy to get rid of huge leverage positions quickly, which made the initial price drop stronger. Some people in the CEX E-Business World even said that this event was planned. Almost every big centralized exchange had problems like outages, slow order execution, and a lot of instability. When order books dropped to you, there were technical problems because there were too many buy and sell orders, which showed where centralized facilities are weak. But some decentralized systems like Aave and Hyperliquid DEX said they had no problems or downtime. That's where it should be. Anyone who wanted to buy and profit from the chaos out here had to be on a decentralized market, not a centralized one. You can learn more about Hyperliquid or Aave if you're interested, but these were the sites that were full when all of this was going on. These DeFi venues kept dealing and being solvent while centralized exchanges failed, showing how strong and well-designed decentralized protocols are when they are put under a lot of stress. What did we learn? A huge number of people lost billions and billions of dollars because centralized markets didn't work. While everything was going crazy, the ones that stood strong and worked were the ones that were dispersed. Wow, that's really cool. These guys have so much money, and as a trader, I can't stand how annoying it is to see all of these CZ-level people using their tweets to manipulate the market. Their systems are also terrible. Some of this is their fault. Please tell me what you think about what I say below. After that, what can we do to make sure this doesn't happen again? What are swaps good for? Exchange should spend money on technology that is more flexible and redundant, like strong cloud hosting, load balancing, and servers that are spread out across the world and can handle huge traffic spikes. Risk and system crashes can be reduced by using microservices, automated failover systems, and strict data backup procedures. It should be standard to do load tests, active system monitoring, and incident reaction drills on a regular basis. Does this mean that markets practice what will happen to their systems if these things happen? Since the US doesn't have any rules, these exchanges aren't forced to do things like this, but they should be. New threats like manipulation can be caught by real-time tracking and integrity solutions. Or a series of liquidations. What should buyers do next time? Spread out your assets and stay away from too much leverage. Use more than one bank and exchange. Learn about DeFi protocols and decentralized markets. Do not sell in a hurry when the power goes out. I tried to tell the people who watched my live stream on Friday about that. While centralized exchanges were down, many decentralized exchanges such as Uniswap, Curve, OnInch, etc., and the DeFi protocol continued to work, letting people make trades and provide liquidity. These events are also making a lot of people angry about Binance Online. Some people are not happy with this and blame Binance for a lot of it. Hey, this is really bad news. I don't know how this will all work out for them. Paul Barron said that China will not stop exporting rare earths. What this means for crypto is that crypto and tech systems will get a lot of help. China just played back end of the world situations. Exports of rare earths will keep going. If applications follow the rules, they're ready to have more talks, and the stable supply chain will have no effect on the production of crypto mining hardware as long as there is control. There isn't an instant shortage of ASICs and GPUs, and the supply of data center equipment is stable. You can expect more red tape and maybe even delays. The crypto and key tech areas may start to see a rise in prices again. You also saw JD Vance talk about this live on Fox. I'll play this clip for you. To be honest with you, Maria, it's going to be a tricky dance. A lot of it will depend on how the Chinese fight back. If they react with a lot of violence, I promise you that the President of the United States has a lot more cards than the People's Republic of China. But if they're ready to be reasonable, Donald Trump will always be willing to negotiate in areas. I hope they decide to follow the right way. No matter what, the President of the United States will protect America. Okay? And then we did see some new information here. If the US and China start a trade war again, the stock market and cryptocurrency are likely to drop sharply, become more volatile, and move away from risk faster. In short, if we do start a new trade war with China, it could be very bad for the cryptocurrency markets. Most likely this is. In which case, organizations wouldn't put money into the market and ordinary people would be the only ones who could trade. I'm sorry to tell you this. During the last, 10 years, we've only seen store pumps. It is making a difference, but we still need trillions of dollars from big banks to come in. We need more level heads to step in. The market value of major U.S. stocks like the SP, NASDAQ, and Dow Jones dropped by trillions of dollars in just one day. This was the biggest drop in one day in months, wiped out when new taxes were announced because they depend on both Chinese demand and supply lines. Tech stocks often take the biggest hits. The mood on all of the world's stock markets goes negative. Sell-offs can happen quickly and dramatically. Futures markets and Asian stocks are preparing for overnight drops of several percentage points. Investors are worried that global supply lines will be shook even more, prices will go up, and there may be retaliation. The response from the crypto market. Since the tariffs were announced 24 hours ago, markets for big cryptocurrencies have seen historic drops of $2,400 billion. Bitcoin dropped by 8 to 10%, and big coins like Ethereum and XRP fell even more, losing $19 billion in one day. The crypto market's level of risk tends to rise during times of macro uncertainty, and traders quickly cut their positions when global trade fights get worse. We don't want this to happen again. We did learn more about the relationship between China and the U.S. here. Investors have heard some very important news. Trump and Xi may have just not understood each other very well, which could explain the whole tax crash on October 10th. At 8:30 a.m. on October 9th, news came out that China was putting limits on the sale of rare earths. Eastern Time, 26 hours before Trump wrote about it on his blog. This event wasn't in the news until President Trump wrote about it more than a day later. China made a statement last night that made it clearer how they control the sale of rare earths. When asked about this, China said that its new controls do not completely stop exports of goods that meet the rules and will be allowed since the market opened on Friday. From our point of view, Trump's threat of 100% tariffs was a bargaining chip.